Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson hosting the program, joined as always by the University of Missouri's Ben Brown.
Morning, Will. How are you?
Not too bad. We were just talking before we started rolling here about March Madness, and Ben, I'm going to roast you. So K-State guy put Kansas in the Final Four.
I did. Not only a K-State, but a Missouri employee as well. So, it was hard to do, but they looked good this weekend, and it's fun having a team here in the region make it in the finals. So it's exciting times. Not only that, we were talking about baseball. I love baseball, and I know you're a big St. Louis Cardinals fan. I'm a big Royals fan for Kansas City. And it's just nice to have baseball back. Spring is here, and I'm excited for a really good baseball season.
Yeah, we're creeping up on opening day, but talking about the market prices that we've seen compared to last week, we're getting ready to hit springtime, like you said. We're getting ready to try and get out in the field. So where are we seeing prices right now ahead of those early planting days?
Yeah, as we get ready to turn the planters out in the field and start seeing more and more here in the next couple of weeks, certainly declining prices over the last week across the board. And for old crop corn, which is that May contract, down 31 cents to $7.23. New crop corn for December down 17 cents. Old crop soybeans in May were down 51 cents to $16.47. New crop soybeans were down 49 cents to $14.50. And looking at those different components for soybeans, soybean oil fell almost 3 cents per pound. Soybean meal fell $5.50 per short ton. That is old crop wheat the old crop wheat for May fell $1.76 down to $9.75, so below $10 again on those wheat contracts. And then new crop July wheat down $1.73 to $9.49.
What kind of highlights did we see from last week? What got us to where we ended up at?
Yeah, a relatively tame week, I guess, in terms of highlights. We saw U.S. ethanol production up 16,000 barrels per day last week. That was hitting a 2-month high. Year over year, corn use for ethanol is estimated about 10.8%. That's a lot stronger than what USDA is expecting. Of course, we've got the busy driving season coming up this summer. New export sales last week were down from what we've been seeing. We did even see some net cancellations of milo, primarily in that Chinese market. No new major purchases of soybeans really from the Chinese and the soybean complex really either. U.S. weekly export inspections were up for all four commodities: corn, soybeans, milo, and wheat. We continue to see a declining trend in soybeans, so a little bit of a counter seasonal move in the soybean contract, and then certainly corn contracts. This is their peak of where we normally see the strongest weekly export inspections, and then managed money fund positions for corn and soybeans were up compared to declining net positions of wheat.
All right, so kicking off the conversation today, we're going to open up talking about prospective planting. That report comes out Thursday, ahead of planting season, obviously. So there's been a lot of discussion on, what the acreage breakdowns are going to be for each crop, and a recent push from people like American Farm Bureau, who've requested the flexibility for CRP ground to be planted because of potential shortages globally. So Ben, where are you expecting to see that report come in at? What kind of highlights do you think are going to come from that?
Great question, Will. And the Prospective plantings report, which is really our first data point for new crop or the 2022 crop as we start to put together USDA balance sheets or US balance sheets, is always an exciting day. It is a market moving day, probably one of the top 3 market movers on the year. Traders are always looking for surprises in some commodity, and even when all the estimates come in normal, I think that's even disappointing to the market, and we see maybe some disappointment that there wasn't a major surprise. So, regardless of what happens, I expect some commodity to come in outside of a trading range and some type of surprise. And even if we don't get it, still a market mover. as we look ahead and get ready for Thursday, probably the thing that I'm watching for is total principal crop acres. That probably doesn't get talked about enough, and you certainly mentioned it, bringing back up the CRP, and I'm going to come back to that here in just a second. The big question is do we look at acreage very similar to where we've been the last 5 years, around that 317, 318 million acres of total principal crop acres, or do we edge up closer to the 320, 321 that we saw, in the back or the early part of the decade, when crop prices are also high? The truth of the matter is that prices for all commodities are strong, and every crop has the incentive to add acres. And so all crops are adding acres. Cotton is competing in the Southern Plains. We're seeing wheat even just struggling to retain their spring wheat acres in the Upper Plains, given that they're fighting against sunflowers and some of these other pulse crops that are seeing very high oil rates at the moment. So the trade is expecting 92 million acres of corn. That's basically right in line with where USDA was when they released their estimate back in February. Soybeans, 88.7 million acres. That's up 700,000 from where USDA was. All wheat at 47.7 million acres. That's a little bit down from USDA's estimate back in February. And again, I think it's, we're seeing some challenges of just that spring wheat crop retaining acres as we head into the planting season here. So happy to answer some more questions, Will, but I'll stop there for a second.
Yeah, so looking at the situation in front of us, with farmers having some issues with the supply chain, getting fertilizer, and even at price points, maybe not wanting to spend sell the farm just to buy fertilizer. What does that do for planting expectations on the crop rotation that we might see?
So I don't know if it's going to have near as big of an impact as what many people had anticipated a couple of months ago. And certainly, we've been watching this situation, watching fertilizer, and trying to get an idea for how that would impact producer decisions. Corn prices have really rallied to take into account for those higher fertilizer prices. But probably more important was we saw that rally in corn prices during the month of February when we were setting crop insurance guarantees and put in the highest crop insurance guarantee we've ever seen for corn. And so there is protection there on that corn crop to go ahead and plant it and at least some coverage to pay some of the higher input costs. So I don't think it's going to be near as much as what we've seen. Probably my expectation is for states like Missouri, maybe Ohio, Michigan, potentially, Kansas, even though I don't expect we'll see a lot of change. It'll be their dryland corn acres that maybe switch from corn to beans. But places like Ohio and Missouri where, you're better, or you have a higher likelihood of getting 50 bushel soybeans than 180 bushel corn or 150 bushel corn, right? Like whatever that break even between the two crops is, soybeans is just the more consistent crop in Missouri and Ohio. And so I think we will see some shift of acres in those states. But then I look for Iowa, Illinois, Indiana, southern Minnesota, eastern Nebraska to really plant a lot of corn. And so, we'll get the state by state breakdowns, but I would not be surprised to see the I states up in corn acres and maybe some slight revisions down in some of the fringe states.
Well, and it's interesting that, talking about a state by state breakdown, because, obviously we're both sitting here in Missouri, and Missouri can't keep pace with Illinois and Iowa when it comes to things like corn production. So how do there's a split between weather expectation east of the Mississippi River and west of it. How does that play a role into maybe what's going to be planted?
Yeah, no, that's a great question. I was in Kansas last week. Right after we got done recording last week, I headed out to Kansas for the Mid-America Farm Show and had the opportunity to visit with several producers after my talk. And one of the things that we talked about was the dryness that is growing across most of the western part of the Corn Belt. We talked about last year versus this year. They also did get some rain last week, so I caught them at a good time because they were happy. But it's not the corn crop that they're worried about. It's the wheat crop and the dryness affecting the wheat belt that they're the most concerned about. And the general sentiment for producers was it's just too early really to start worrying about dryness for corn. However, when you look at the drought monitor, probably the state that pops out the most is Iowa. That is the area that, when I look at it, makes me concerned when I think about corn. And certainly if that dryness continues to grow as we head into the spring, we could have some challenges, but certainly plays a factor. Corn is always, it's got more input cost. And so it is, something that if you're worried about being able to produce a crop, you're wanting to look for crops that have lower input cost. And that certainly does not weigh in corn's favor. So good question.
I don't want to beat a dead horse on this topic, but looking at the areas that you might see more adjustments into, what a standard rotation might be, would it be fair to expect that to be more on the fringes? Maybe the corn belt stays with its, fairly standard corn soybean split, but maybe when you look at planting for states like Texas or southern Missouri, even in Arkansas, areas like that, do you see that there's a higher chance for adjustments there?
Yes. Short answer is yes. So in Missouri, like I said, we've got a lot of acres that there's a greater likelihood of producing 50 bushel soybeans than producing a consistent corn crop. And so I think some of those acres will shift to soybeans. For any acres that are brought into the picture, so if there's additional acres, which I do actually expect additional acres, I think I'm one of the few that thinks we're going to see more acres this year than what we saw last year. The pushback I get from people is, well, we had high prices last year, so any acres that were going to come in should have came in last year. I would push back and say that, farmers like to see 2 years of higher prices, at least, if not more, before they start thinking about tearing up that pasture that they worked hard on to establish. So, but I do think we'll see a little bit more acres come into the picture this year. But then, to my comment I started out with, every crop is fighting for acres. And so in places like Texas, grain sorghum and cotton are going to fight against corn acres because they're more drought resistant. They have better drought traits. So.
And then returning to your comments, I guess both our comments on CRP, how much of that ground might play a role in these acreage battles?
Yeah, great question as well there. So I don't actually think the addition of CRP is going to have much impact on the crop side. I actually think it has a bigger impact on the cattle side. I'd ask you to, maybe pitch that question to my father, Scott, over there. He's not my father, but, so when I think about, opening up CRP ground to help relieve some of this pressure, it's in crops that, frankly, we're just not going to solve the issue this year. And I don't even think we could take enough corn or enough ground out of CRP and put it into corn and soybeans this year to really make a major dent. So the reason I say I don't know if it's going to have much impact on the crop side is because what's going to come in is going to be marginal ground. It's not going to be high yielding. It's going to come in areas where it's already a challenge to maybe get additional fertilizer for this year. So I'm not optimistic about that. The reason I say it could have a bigger impact on the cattle side is it could be the relief for cattle ranchers in the western part of the Corn Belt to extend cattle on grass for a period of time. And so it doesn't provide that big incentive for cattle to go into the feedlot. So it could be a bullish factor for cattle prices if that were to happen. But again, that's my father Scott's topic area. So I won't say too much more about that. But I would say that has a bigger impact for livestock than crops.
And then for anyone who doesn't know, Scott Brown is also with the University of Missouri. He's more on the livestock side, doing some great ag economist work over there as well.
Yeah, the legend, the myth and the legend.
Exactly. All right. Well, for listeners, if you want to keep an eye on reports to watch this coming week, ethanol report that comes out on Wednesday, hogs and pigs for any hog producers, that's also on Wednesday, export sales, and again the prospective plantings report. Those are both coming out Thursday. Well, thank you all for listening. I appreciate you joining here, Ben. Will Robinson on Brownfield.